Joining us now for an exclusive interview is Oliver Baete, the CEO of Allianz. Very good to speak to you. Of course, Allianz, Europe's biggest insurer. Oliver, very good to speak to you this morning. Thank you for joining us here on the European Market Open. I want to ask you about this plan that the German government has to backstop losses for commercial credit insurers. Is this something that you will welcome?
Yes, indeed. Good morning from Munich. Sunny Munich, I have to say, and things look good from over here. So to your question, Anna, the point is that, the coronavirus has hit our industry like a meteorite impact. And so it's a really systemic effect on the economy. And for the credit insurance side, we're the world market leader. The business model normally would suggest that we cut our credit lines that are massive, Germany, 400 billion for the industry alone, down, and would actually create a domino effect that may lead to increase in insolvency. So the government has clearly learned from the 2008 and 2009 crises and has worked with the industry and us as a leader in the industry to set up a program that prohibits these procyclical behaviors from occurring. And it's a very, very important measure the government has taken. I can only congratulate them because it will help us to stabilize particularly small and medium-sized companies in trade in Germany and beyond Germany.
Oliver, Matt Miller here in also sunny Berlin. Wouldn't you be able to do that even without this? I mean, don't you have the resources, or is the scale of defaults so big that Allianz needs the government to step in and backstop losses?
No, absolutely, we don't need that. It's very important to understand that the way the credit industry works and credit insurance industry works is allowing us to manage risk the way we really want that, particularly Allianz. We are extremely stable. We could absorb all the losses. The problem is the following. As you have seen in the capital markets over the last few weeks, is that people will then behave in a very procyclical way. So, for example, if we cut exposure lines, we're insuring trade credits, then people will further reduce trade, and that may lead to insolvencies that we would not cover. So the economic effects would be highly detrimental, but Allianz would be safe. And that's unfortunately an outcome of the industry business model. And we've had learnings from the 2008 and 9 crisis and told the government, if you don't want this domino effect, there needs to be a public-private partnership to make this thing happen. In fact, it's not a protection of our balance sheet because we don't need the protection. What we are doing is we're extending lines of credit that we would normally not hold.
Okay, so this makes sure that any decisions that are made around trade financing then don't make things worse than they already are. Oliver, do you need, or does the insurance sector need support that goes further than this? Is there an area of the insurance industry, or perhaps another geography, where you would like to see something similar to what's happening in Germany?
I personally believe that we would actually need a solution like this on a European level. The French government has also enacted something, but is much more limited. And there are areas, and we'll talk about it once we are through with the corona short-term impact, because this is such a massive earthquake-like, and again, I would like to compare that to a meteorite impact, that there are certain covers like terrorism that we do have today in Germany and in other countries, or nuclear power plants blowing up, that cannot be insured with normal policy wordings, where you need an industry solution, a public-private partnership. And I think going forward, we need to look across a number of sectors and exposures and say, how can we make sure we cover better the needs of society when you have a systematic effect? Please remember, systemic risk is not something that the insurance industry can insure. We rely on diversification over time and in the portfolio. Just imagine that we would not have 1 in every 10 cars having an accident every year, but everybody having an accident. Then motor insurance would become unaffordable. So we need diversification, and corona or any large pandemic is a systemic event that does not have diversification. So the industry economic model cannot really work. To your question, we do not have as a company large exposures, and I don't know about any others if the contracts and the contract laws are upheld. Now, losses for the industry, in my opinion, personal opinion, are going to be massive. There's a lot of debate, are insurers really putting up? I can tell you across sectors, whether that's healthcare, business interruption, travel, media and entertainment coverages, there will be huge losses for the industry coming. It just takes a while for those to materialize. So 2020 is not going to be a record earnings year for the insurance industry.